What's going on, guys? Welcome to another backtesting video. Today we're going to be continuing from last time. Last time we were looking at GBP JPY, so I'm just going to continue that week that we were looking at. And yeah, we're going to start on Wednesday. Well, I'm going to start on Tuesday. From Tuesday, Asian session, running into Wednesday, Thursday, and Friday. I'm going to get started straight away. And yeah, hope everyone's doing well. Hope everyone's enjoying their week, and I hope everyone's staying safe and healthy. But yeah, and then also recently I have learned about what have I learned about? I've learned about quarterly theory, and I am going to do some back testing on it. If you've heard about it, let me know in the comments what you think. But yeah, recently I've heard about quarterly theory, and I'd like to do some research on it. So we're going to be taking a look at that once I've finished back testing this week in general. So yeah, we have a fair value gap here. Remember, this 7 p.m. is the start of the Asian session, but that's not 7 p.m. What am I doing? 7 p.m. is all the way back here. Wow. Okay, let's just... I was thinking this is the Asian session. My bad. 7 p.m. is all the way back here. Cool. So I did actually annotate Tuesday, but I didn't do it on camera, so that's not going to be in this video. But you know what? We'll start from here because this is where the reversal happens before we start to move higher. And it's always important to study how reversals form. So let's take a look. We have a breakaway gap here. Why? Because it doesn't get, it just shouldn't get traded to, breakaway gap. And obviously this is GBP JPY, so we can anticipate a lot of action during their Asian session in general. We don't really break structure until these swing highs are taken out, really. So I'm going to mark that out as a break of structure, and then I'd see this then as the breaker, which is why we trade back to it here. Low, high, lower, low, and then we break higher here. Why isn't this the break of structure? Because this is the last significant swing high. Does that make sense? Hopefully that makes sense. It should make sense. So I'd look at this swing high specifically, drag that out. Technically, do we use that whole range? I mean, the order block is here. See, this is what happens when you don't have a 30-minute chart. But anyway, let's just use that, call it breaker. We'll make it a different color. We'll make that color, and then we'll mark out the 50% level of it as well. And you'll see that we traded right to the midpoint of it. Because remember, guys, this is an algorithm. It's just code, zeros and ones. So that would be a nice entry, although it's before the Asian session, but you can see a breaking market structure. And then if I was to enter here, I'd aim for these highs up here. Obviously, hindsight is 20/20 vision, but this is how you learn. And if you've been watching my videos, if you've been watching my daily reviews, you'll know that I am pretty accurate, so there's a reason for that accuracy. But I'm not a millionaire, guys, so don't take everything I say for, you know. So we consolidate, trade higher, then we take out these highs, there's buy side resting up there. Then we have a run on stops, we trade back down into this swing high. Why? It's breaker, low, high, low, low, then we break higher. So technically this is a breaker in itself, which is interesting. I'm just going to put breaker. And we actually trade, do we trade the 50% level of it? We do. It's always interesting when price trades to these 50% levels. Look at that. You can see we come higher, and after we take our high, what do we anticipate? A run on stops. Do we have a run on stops? Yes. Where's the run on stops? Here. So as this low gets taken out, we can mark that as a run on stops. Run on stops. Center. Put it on the right. And why is there a run on stops? Because we're just taking out this swing high. Just like we took out this swing high, we had a run on stops here. And these run on stops are what drive me insane. Like, these are what from now on I'm going to mark every single run on stops I see, because being able to anticipate them will help me with my trading a lot. because when you see price break like this, you're like, oh no, it's going down, but it's just a run and stops. It has to do a run and stops. It has to do a run and stops. And then we have an inversion fair value gap, so it should find support there. You can see that happens here. So we can make that, let's make that a blue inversion fair value gap. And I'm going to turn up the lo-fi music just a little bit. Cool, so we continue higher, nothing too much. We have, if this is a breakaway gap, then I see this as a measuring gap because it doesn't get traded to. And because it's halfway, this should be halfway off the range, off the first leg off the range. Let's have a look. This low to this high, voila. So when I say first leg, we got this leg, and then if you look higher, you'll see we reach up to that -1 level. So this is the first leg off the range. So there should be a midpoint of that, which is here. So this is where the measuring gap forms. And then you can see that massive run on stops here, and then we move higher for the next leg off the range, and then we should see the same thing occurring because it's just cold. So let's call this measuring gap. Then we move higher, come back down into this order block. And we trade back into an order block again here. The high of it, beautiful. Filling in this range. And we also take out this buy side liquidity resting up here. So let's think about partials now. Where would I take out a partial? You could take a partial. If you entered here, definitely take a partial out above that high. So let's put partial here. Why isn't it shrinking? Whoops. Oh no, my partials I usually colour in orange. And then let's look at this massive fair value gap. So this is an inversion fair value gap, but let's mark out the 50% level of it and see how price treats it. You see it respects it, doesn't it? So what I'm going to do, because I don't want to put a massive screen over it. Oh, I think it respects it to the tick. Let's see. Yeah, wow. You can't make this up, guys. So this is where the gap starts, here. Why? Because here price opens and continues. So this whole area is an inversion gap as we trade through it. Interesting. So that could be another entry in itself. Craziness, but it's doable. And then where's our breaking market structure? Here, above this swing high. And then this would be the breaker, low, high, low, low. So these candles here would act as the breakers. More specifically, this range here would act as the breaker. A lot of consolidation. You can see the areas getting balanced. We have another breakaway gap. What colour was my last breakaway gap? It was blue. Breaker and balanced price range. And look how we find support on this inversion fair value gap as well. We find support 50% level on this wick here, on this candle here. So we come up through it, support, ding, and then we continue higher. These are all things to take note of, guys. That's just something as well. Look at that. Trade through that. 50% of it creates it. Like this. There's algorithmic delivery going on here. Find support 50%, then we expand and look at this. We have an immediate rebalance right here. Now this rebalance would drive me insane. So we trade higher, and then we open, and then we trade all the way back down, and we rebalance with this and this swing, this old swing high as well. And I think, is he crazy? Is he crazy? Is he crazy? Is he crazy? He's not crazy. Oh, we didn't reach it. Let's get rid of that. But I can imagine, because we take out this high, this candle here takes out this swing high here, right, which is buy side liquidity. So the run on stocks would essentially be on a lower time frame right below here, and then it rebalances and leaves the range, doesn't it? So that's something to take note of. And I'm going to put immediate rebalance here. We trade, come back down, higher. Now there's a lot of consolidation here. This isn't the best of price action, but after this high, I'd probably take off my full position. I would take off my full position, especially considering Asia's just started. So we let it consolidate, and then what happens after consolidation? Expansion. So where's our expansion? Where's our breaking market structure? Well, technically, I'm looking around here, but this is all this whole range is consolidation until we break out of it, and then we find support on top of it. So this, from here to here, that's all consolidation until we break market structure, which is here, and then we expand. But let's look at this price action in general, because it's times like this which I hate. Let's mark out everything I can see, because honestly, when I look at this range, I don't know what's going on. Do you know what I mean? It's not the best. So if I study it enough, surely I'll pick up on something, right? It's just heavy consolidation. I'm gonna draw out all the gaps and see what I can see, if I can see anything. We have this. We have this. We have this. This is getting messy. Let's not do that. Right, let's just continue. Fuck it. Excuse my language. So we continue high. So none of this I see as tradable is what I'm saying. And the reason for that is because there's no direct breaking market structure. I mean, here we've got a swing high. You can see that as a breaking market structure buy side. This moves from here to here. Could be seen as a breaking market structure with a fair value gap entry here. Yeah, okay. So you're making sense of it. So there's a fair value gap entry there, so we could buy that. This needs to get shrunk. And why can we trust that? Because this has found support within this fair value gap, and I'll explain that in a second. So you can buy that, and then we have 50% of this wick, which is a range, remember. So this should provide support anyway. 0.05. Does that do so? Yes, it does. We can mark out consequent encroachment. Let's just put C.E. Center, middle, right, red. Consequent encroachment, beautiful. Technically this would be an entry as well because it's rebalancing with this. And also this is happening in the fair value gap, and this is similar price action. I'll show you in a sec. This is similar to, what's it similar to, Sean? It's similar to this. So this inverted fair value gap, you see we find support on top of it and then we expand higher. Same thing's happening here, we find support within it and then we expand higher as it continues to respect the 50% level. You know, that's what we like to see. I'm going to call it IFVG because it's an inversion fair value gap. And I'm going to call this one a FVG because that's a fair value gap because it's traded to it. You see the wick of this one trades to that 50% level, whereas the body of this one trades to that 50% level. And then we expand, find more support, and continue to run up higher. Where would I take off 50% of my position above this swing high? Where would I be? Actually, to be honest, I don't know where we're actually reaching for. So that would be one thing to consider. So I would take off. I'll probably take more one position. That's a nice move though. Very low liquidity low liquidity run. Oh yeah, the breakaway gap. Down here. This is only the Asian session, guys. I don't even know how much. Like we've got the whole of. This is still Tuesday's price action. So I'm just gonna keep going. Measuring. Oop, I don't want to do that. And then we come up, and as soon as we take out that high, I'd want to get out my position. Ideally, which is here. Then we consolidate, we expand higher one more time. We keep coming back down into this wick. Look at that. Fill it, and then we leave it. Do we have an entry? Not really, no. I mean, you could look at this as an entry, but I'm guessing this is where again lower time frames come into play, because that's consequent encroachment right there. So that's an immediate rebalance, so we can go up, down, immediate rebalance. You could enter on that. That'd be a crazy entry. And then as long as it's following support, we could be buying that. So we can call that, you know, I'm not going to call it fair value gap, I'm going to call it a wick. A W fair value gap, or wicked fair value gap, because wicks are gaps too. And then where would we expect to expand to? Double what it's already done. Double what it's already done. Double what it's already done. But you can see it reaches a little bit higher than that. So I'll probably get out at the breaking market structure, which is near the top, near the range. I'm just thinking, am I using the right swing low? That would be more accurate, wouldn't it? Look at that. That would be ideal, but why that? Why? I guess this is what starts to move. And it's next to the lowest down close candle. Like this isn't the lowest down close candle, this one is. You know? Interesting. That would be an ideal entry there. Move there. Let's look at this fair value gap. We have a breakaway gap here. Is that not a measuring gap? no, it's a breakaway gap. Because this is another range, this is another leg, isn't it? So I'd see that as I'd want to see that left open. And the bullishness continues as we respect the 50% level of this fair value gap. Let's call it an FEG. And then where's our breaking market structure? I wouldn't see a breaking market structure until this swing low gets broken. So let's put break of structure. As soon as that gets broken, that would make me happy. So I'll be looking at this wick as a breaker anyway, and you can see we trade up back into it here. Crazy entries, I know, but then you can see here and consolidate a lot, heavy consolidation, until we start running back down into these lows. And then we consolidate again. This kind of consolidation I don't like, so what I'm going to do, and these are relatively equal lows below here, all of that is creating sell stops, so we can use that sell side liquidity. I'll just get out my position below that if it wants to go to the right position, which is there. Cool. And then we'd buy back in there, and then consolidate, we come down and come down back down to that gap. Interesting, look at that. And then we start Wednesday. So let's look at Wednesday, because this is all just consolidation. Bearing in mind we're taking our sell side here, so we're looking for that buy side to get tagged. Let's just take that into consideration. So we're waiting for that buy side to get tagged for the continuation lower. And let me just do something, because I think I might have discovered something. Interesting. Very interesting. So look at how maybe that's just in this scenario, but we will have another look at that to see. I'm not gonna, yeah. So what I just did then was I looked at the range from this sell side liquidity, from this sell side liquidity to the low, so the sweep. I looked at the sweep and then I put it on top of the buy side, which would anticipate getting taken. And then when I stack the two on top of each other, you can see that we trade 2 times the amount of the sweep, pretty much to the pip, before moving lower. What does that mean, GBP baby? I don't know. Don't ask me. I don't know. It's not interesting. Anyway, that's just something cool to look at. And again, algorithmic delivery, like what do you expect? So as this buy side gets taken, we're waiting for some kind of breaking market structure to show that we are coming lower now. Where's the breaking market structure, guys? Can you identify the breaking market structure? Yes, we can. Here. Now, we do have a breaker, high, low, high, high. Do we trade to it? No, we don't. We trade to the fair value gap though. And this would be more thingy to trade to, assuming you want to be moving over. But let's just look at the fair value gap. So we have a fair value gap here. Damn, it's already been 20 minutes. This is going crazy fast. Come into the order block. Come back up one more time. So can we trade that? I mean, technically you could, because it is a fair value gap. So this candle would form. As soon as it trades up into that, sell. because we've had the break in market structure, so we know we're going lower, and it's an aggressive break, so we're waiting for this entry here. It can touch it twice, it can touch it as many times as it wants, and then it continues lower. And then where would I take out my 50% level? Well, I'm aiming for these lows resting below here for one for sure. But we can look at 50% of that entire range, and we should be able to see a run on stops here. This run on stops, so that low here would be good for a partial. Interesting, isn't it? Almost seems like it's an algorithm. So can buy back there. Actually, I'll put half my position off there, and then I'll take a fully take off my position there. But wait, Sean. I mean, wait, GBP baby. It goes down like that. I would not anticipate that. Then again, if you're looking for these lows, I mean, let's not think too much. Yeah, let's not think too much, guys. So, fair value gap traded to, this would be the breakaway gap. Well, I guess this would be, wouldn't it? There's no rebalancing around here. I wouldn't be surprised if we came back up. Was there? Yeah, I was gonna say, not enough rebalancing going on if you ask me. Right, so it's coming up to 26 minutes now. We're just about to start the London session, which is from 2 AM. So I'm going to do this one in the next video, which you'll probably get tomorrow. So thank you guys for watching, and I'll catch you in the next one. Peace.